We're going to have a major economic contraction because we have to work off really 20 years of excesses that were the consequence of artificially low interest rates. I mean, the excessive debt and consumption and speculation has come at the expense of serious damage to the underlying structure of the economy. And all this has to be worked out one way or the other. And so it's going to be a very painful process that is going to be elongated by government's efforts to mitigate it and get in the way, because the recession is the market's method of repairing the damage that was done as a result of all the malinvestments and misallocations that were a consequence of the Fed's manipulation of interest rates. But when the government tries to push back against that correction, it just elongates the process and makes it more painful, which is, what we've been doing. Every time we start to see a problem, we slash rates and print money. We just saw several large banks fail, and a lot more would have already failed had the Fed not stepped up and backstopped everything. But that doesn't mean we're out of the woods. I mean, all of the problems that resulted in Silicon Valley Bank or Signature Bank or whatever going under, those problems are there throughout the entire banking industry. All you have to do is think about all of the mortgage refinancings that occurred over the last 5 or 6 years, where you've got all these 30-year mortgages in the threes. That's great for the borrowers, but what about the banks that are holding all that paper? They're underwater. They're losing a ton of money on these mortgages. Think about all the commercial mortgages that were extended, where the collateral has collapsed, where commercial real estate values have been halved or down even more than that. So you have all this negative equity in all these loans that the banks are holding on to. Plus, the banks also have large portfolios of government, treasuries, where they own 10 to 30-year maturities, again, where they're collecting 1% and 2% interest in a 5% environment. So they're losing a lot of money on these loans. Meanwhile, everybody is loaded up with debt. Student loans now are getting close to $2 trillion just there. Credit card debt, record territory. Everybody has debt. Corporations just went on a debt binge during the era of cheap money, and their balance sheets are at risk dramatically as all this low yielding debt matures into a higher rate environment. And look at the federal government. I think interest on the national debt right now is $600 to $700 billion a year. That's double where it was about a year ago. By the end of this year, it'll be about $1 trillion. By the end of next year, the US government will be paying $2 trillion a year in interest on the national debt, which will be about $35 trillion by the end of next year, headed for $40 trillion, probably in another year or two from there. And that's if interest rates don't even go up. What if rates keep rising? What if they go to 7% or 8%? So this is a huge debt bomb that's going to explode. Nobody is talking about where the next, deficit is going to be, because when we go to a situation where we get 10% unemployment again, and we get a big economic contraction, you're talking about maybe $4 to $5 trillion deficits. Because every cycle, the deficits get bigger and bigger, and the QE required to finance them gets bigger and bigger. And I don't think we can go for another cycle. The numbers are now too big that there's no way we can goose the economy with that much drugs and not overdose at this point. And to start having the deficits grow at that type of rate. And then the markets would have to realize that, wait a minute, the balance sheet is going to grow forever. It's all this talk about reducing the balance sheet and that you're not monetizing the debt and that America isn't a banana republic is just a fantasy, because the deficits or the balance sheet can never be contracted, because they can never get far along in the process without another recession kicking in. And now they have to ramp it up, and it has to get much bigger than it was than the prior peak. And so it's just always going up. It can never go down. And, eventually the bottom has to drop out of the dollar. And that's when we have a real crisis in the country, because then once the dollar starts to spiral and it pushes up interest rates, long-term interest rates, and now the Fed is forced to print more money to stop rates from rising, then it just accelerates the process of getting rid of the dollar. And then you get into a currency crisis which is much worse than just a financial crisis. We are the world's biggest debtor nation. We're not a creditor nation like Japan. And in fact, we owe more debt than all the other debtor nations of the world combined. And, the last time we had a big inflation problem during the 1970s, and we kind of solved it during the 1980s, we were the world's biggest creditor nation in the 1980s. And we could afford to pay the high interest rates that were required to bring down inflation. But, we have these twin deficits now. No one even talks about it. We were talking about $1 trillion trade deficit and a $2 trillion budget deficit. That's $3 trillion during good times, supposedly. Wait till you see what happens during bad times. And even Donald Trump, who ran, his main campaign platform was bringing down the trade deficits. I mean, one of his themes was that we have to make America great again by reversing these trade deficits, by reindustrializing. Well, when Trump left office, the trade deficits were at new all-time record highs. And then Biden broke that record and we got even bigger deficits. So those deficits are off the charts. Nobody talks about these twin deficits now. I remember when they were a big problem in the 1980s, people were worried about the trade deficit when it was a fraction of what it is right now. And they were worried about the budget deficits when they were a fraction of what they are right now. Right now, you have maximum complacency because we've gone so long and these deficits have grown so large without any apparent negative consequences. So everybody has been lulled into this false sense of security that because we haven't had a major crisis, that we never will. But, just when you least expect it, it's going to hit. What we need is to go back to a monetary system that actually is built on money. When we had paper, the paper currency derived its value from the money that backed it up. That's what gave the original, paper money, dollars, Federal Reserve notes had value because they represented ownership of gold and they could circulate as a more convenient way of transacting in gold because you would transact in the bills rather than the bullion itself, but the bills derive their value from the bullion. So we have to go back to a real monetary system. I think with today's technology, with the internet, whether we use blockchain or something else, it's very easy to digitally represent gold so that we don't need paper. We don't have to be constrained by a physical bill. You can digitally replicate gold and you can transact in digital gold that derives its value from the actual gold. And it doesn't have to be a fixed supply. It's okay if the supply of gold grows by 1% a year or so, which is the historic average. That kind of inflation is fine. The population grows by more than that. And so that works. I mean, gold has worked as money for thousands of years. We don't have to reinvent the wheel. We could just find ways of making the wheel more efficient with the technology that we have. And eventually that's where we're headed. I mean, there's no way the current monetary system will survive. It is impossible because the governments will abuse it through inflation. I mean, inflation is just another form of taxation, and it's an easy way to extract taxes from the public because the public doesn't know they're being taxed. The public thinks they're getting something for nothing when the government spends money without collecting taxes, but it pays for it by printing money, and it destroys the value of everybody's savings and everybody's wages, and then prices go up. That increase in price is a tax, but the public doesn't connect the taxation to government because everybody blames rising prices on greedy corporations, on Putin, on OPEC, on everything but the government. And so the government likes that because it doesn't have to accept responsibility for the taxes that it lays on the public. A lot of people think there's no alternative to the dollar. They say, oh, well, the world is stuck with it because it's the cleanest dirty shirt in a hamper. And I think they're mistaken. First of all, I don't even think we're the cleanest dirty shirt. I think there are other dirty shirts that actually are less dirty. But I would accept the fact that the euro, the yen, the Chinese RMB, these currencies are not suitable to replace the dollar either. I think the alternative to the dollar is gold. I mean, that is the obvious alternative. I mean, prior to the dollar, it was gold. I mean, gold was the international reserve. And even when Bretton Woods and the world went to the US dollar, it was predicated on the dollar being backed by gold. I mean, the dollar was convertible at a fixed exchange rate. At the time, it was 35 dollars got you an ounce of gold. And the whole expression, the dollar is as good as gold, is because it was gold. I mean, legally, the dollar was a weight of gold. And so everybody that owned Federal Reserve notes owned IOUs for dollars, for gold. When Nixon defaulted on that promise and we told the world, you're not going to get real money for your notes, you can't have the gold that we promised to pay. It's like we wrote checks and we told the world, you can't actually cash the checks, but you're free to use the checks and negotiate them among yourselves. You just can't take them to the bank and get what we promised. You could just, circulate these bum checks. But I think the world is going to ultimately reject that dollar. And then what's left? You just go back to gold. And so I think more and more of these central banks are going to be backing their currencies with gold. And I think that's why central banks have been buying gold and why they will continue to buy gold, because they're preparing for the day when they have to back their currencies with real money again. They won't be able to back their currencies with dollars because the dollars won't have much value. And that means the United States, we're going to have to back our currency with something again.